I'm impressed everybody's still here. You do know we have a lightning beer tap in the garden, so it's thank you for sticking around for the final session. Alex, great to see you. From my perspective, you're a big deal in the ecosystem, so thrilled to have you here at the conference. Before we get into your business, why don't we just talk about your personal background and tie it into how you discovered Bitcoin for the first time?
Sure. Yeah. So it's great to be back in El Salvador. I've been here a few times now, and it's always a fun visit. And thanks for this conference. It's incredible. You guys are doing such a great job. So I've been in Bitcoin for most of my career. Started working in the space in 2013. Moved out to San Francisco with the goal of being a Bitcoin engineer, and have been mostly doing that ever since. Worked at a few different startups out there. Ended up going to grad school in the Bay Area, and before starting my current company, River.com, got pretty involved in the meetup scene, started helping run the San Francisco Bitcoin developer meetups. I brought the Socratic seminar style that Jay in New York had started, and stole that and copied it in San Francisco because I felt that we really needed that there. And that's been a pretty big hit. And then, started River Financial 2.5 years ago, or almost 3 years ago now, and been doing that ever since.
Cool. And so tell the crowd what River is.
Sure. Yeah. So River Financial is a Bitcoin financial institution. River.com. We focus on sort of high-end retail, so call it like mass affluent up through ultra high net worth individuals, and also a number of institutional clients. And we are focused on providing them various types of Bitcoin financial services, whether it's custody, brokerage, mining, et cetera. And we've also been big fans of Lightning from the very beginning. When we launched our initial product 2.5 years ago, we had Lightning integration back then. And so we've always, back then it was pretty niche, and we knew it wasn't going to be something that was super popular, but we wanted to get smart about it and start supporting the ecosystem. And so I'm very happy that we started Lightning native from the beginning.
Awesome. So you're Bitcoin only, almost 3 years old, focus on both retail customers and institutional customers. Why don't you tell the crowd how you view the institutional landscape? You're a CEO, obviously you've got a lot of responsibilities. You probably have a framework in terms of how you kind of categorize institutions. Why don't you share that for the crowd?
Yeah, so our bread and butter is certainly high-end retail. The institutions, we serve a subset. So I'd break institutions down into a number of different categories. One is the sort of what we call like individual adjacent institutions. So legal entities, LLCs, trusts, et cetera, that are typically have like sole ownership or a very small group of owners. And they're not like true operating companies, largely pass-through entities, things like that sort of need something similar to a retail-like experience. So we serve a lot of those types of clients. Then there's the funds of various sizes, whether it's a small family office, which we also tend to serve a lot of, up through the pension funds, which once you get into that level of money, we don't serve. That's sort of, they kind of need different solutions when they're at that scale. And then the last category I would say is operating companies, and we see a whole flavor of operating companies, whether it's a Bitcoin native company that is trying to build something in Bitcoin, is looking for somebody to help them with various behind the scenes things, to farmers or plumbers or small businesses, all the way up to big corporations that are looking to do more with Bitcoin.
Sure. So I'd like to start to peel back the onion here. So just thinking about institutions broadly for any of the three categories that you have or that you serve, is it simply institutions in these early days buying and holding, or are they doing other things besides just acquiring Bitcoin?
So the vast majority of these pass-through entities, these individual adjacent entities, are buying and holding, or they're accumulating Bitcoin through one way or another, whether that's buying, whether that's mining, et cetera. The operating companies that we serve are also largely just buying and holding. We don't serve too many companies that are using Bitcoin beyond sort of a treasury instrument, a place to just store some value and park some wealth. But that's also because we haven't historically sort of built systems catered towards the operating companies. We're starting to see some interest in especially Lightning, from a lot of other companies in the space. And so that is a trend we're seeing demand for and are looking at leaning into.
Sure. And obviously we're here in El Salvador in large part because President Bukele got up in June and said, hey, we're going to make Bitcoin legal tender in this country. Are you seeing any expressions of interest from government, whether it be at the nation state level or the city level or anywhere in between?
Yeah, so I think El Salvador is a real leader in the space. I think governments around the world, and especially around Latin America, are paying attention. And so I have a feeling that we're going to see more there over the coming year or two. I don't know exactly how it will manifest itself. I mean, El Salvador is a bit unique in that not only did they decide to make Bitcoin a legal tender, but that's really sort of a minor aspect because what the president realized was they actually need to build an app to make it easy for all of their citizens. And so I think the question is, will other governments not just say, hey, Bitcoin's legal tender, but put in the work to actually build the infrastructure to make that feasible, and because that's the real lift to do something like that. So I think it's TBD. So, yeah.
Okay, and I think everybody in the room can relate to this question. I mean, we've all been on our own personal Bitcoin journey. Bitcoin's not intuitive. It's not something you get, in a couple of minutes or even an hour or two. And with that context, I imagine, as CEO, you spend a fair amount of time sitting with institutional clients or even prospective clients trying to educate them. Can you just maybe give us some insight in terms of what that's like, or maybe you have a funny anecdotal story of something going awry with trying to educate an institution? Anything you could share on that front would be great.
Yeah, so there's still a big knowledge gap across the board when it comes to institutions. I think, a lot of the confusion is around how to even reason about, or conceptualize Bitcoin still. Where is it, right? The concept of keys is still very confusing for people. They kind of think that you can simultaneously use an exchange and you also have keys. There's just a lot of hand-holding through sort of the flow of funds and the mechanics, and so that's still the largest area of confusion, I would say. From an investment perspective, from a convincing people that this makes sense to put some of their assets into, I think one of the biggest challenges for the traditional money to get past is it just kind of sits there. It feels sort of just like an asset that just sits there and doesn't do anything. And that's sort of hard for them to understand. So I think that's why you see a lot of institutional money flowing into the operating companies instead of Bitcoin directly. There is still a lot of institutional money flowing into Bitcoin, don't get me wrong, but the money that doesn't, I think a lot of it doesn't flow into it because the way a lot of these people who run these funds think is, they can reason about operating companies and cash flows and balance sheets, and Bitcoin doesn't fit that mold. So I think that's one of the big points of I call it confusion or hesitation for putting larger amounts into Bitcoin for the institutions.
That makes sense. So let's shift gears here. Obviously, we're here in El Salvador for a Lightning Summit. You've built a leading platform, Bitcoin only, focused on serving both individuals and institutions. You seem to have a big focus on Lightning. Can you just talk generally about your interest in Lightning and your River's interest in Lightning and what you're doing on that front?
Yeah, so I think Lightning is very critical and core to the long-term future of Bitcoin. I want us to continue to stay smart about it as a company, and so to that end, we put a good amount of our time into scaling up and really trying to take our Lightning infrastructure to the next level and think about what's next, what's the future, and try and skate to where the puck's going. So we're working on a number of things that I think will be useful for both operating companies and our retail clients down the road. But the way I see things is we're still very early on. I think we're still a few years away from any of this becoming really, really mainstream, at least. And there's still a lot of sort of, you know, one of my heuristics is, you know, is there a price yet for liquidity? Is there like a real, true like market price that we can all kind of like state is the price? Is there like a quote unquote risk-free rate or lowest risk rate in Bitcoin yet? And until that's the case, I don't think we've truly hit maturity.
So picking up on that, when do we get to that point? Is that 2024, 2028?
I have no idea, to be honest. I think it's really a function of how much work goes into it between now and whenever that is. I think the harder people work, the more people build, the faster it will happen. And I don't know what that trajectory is going to look like, but I think it's at least 4 to 5 years.
So that's a message to the builders in the audience: build faster.
Yeah, exactly.
So I mean, can a River client use Lightning on your platform today?
Yeah, I just bought my beer with Lightning from the River app.
Okay, nice.
Yeah.
And so you mentioned operating companies as one of the 3 main institutional client types for River. I mean, beyond buy and hold, are you enabling, maybe I'm thinking of like a large retail customer. An easy example would be somebody like an Apple or a Starbucks or McDonald's, a sophisticated institutional multinational client who touches a lot of retail consumers. Are you, without sharing anything confidential, are you working with clients like that to try to enable Lightning, or is that kind of still down the road a ways?
So we're not doing much merchant processing work right now. There's already some great companies in the space, like OpenNode, for example, doing great, merchant processing tools. We're more looking at an infrastructure for other financial institutions, and we're like looking at working with other financial institutions, both in the space and more broadly, to help them get Lightning up and running.
Okay, and obviously El Salvador has been leading the way here, and the government's launched the default option for people, the Chivo app, which in theory has some Lightning functionality. Is River involved in El Salvador at all, whether in a public fashion or a private fashion?
So no, the app right now we're not involved. We're not involved with, but I think there's going to be a lot of opportunities down the road to get involved with governments as they build out their different apps, and excited to potentially work with any that are interested.
Got that. And then building on what you just said a moment ago, obviously you've kind of been one of the pioneering companies trying to figure out how to make Lightning useful for both your retail clients as well as the institutional clients. What are some lessons learned or insights that you've gleaned along the way?
So one of the things that I think, so I don't know if this is so much a lesson as so much a trend that I see potentially developing, is I think actually the way that the institutions that are going to be most interested in Lightning in the very beginning or sort of at this phase, it's going to be kind of a barbell. I think it's going to be a lot of more smaller merchants that potentially see a lot of opportunity to cater to the Bitcoin community. Granted, there are some big merchants, doing Lightning stuff in El Salvador specifically because they're kind of forced to. But most of the merchant activity I think is going to be with a lot of the smaller retailers for the time being. But I think what we're also going to see is a lot of the existing like exchanges and existing players in this space starting to integrate with Lightning. And I think a trend that is going to happen that I don't think people have really talked all that much about is that I think Lightning is actually going to be a really big settlement rail between cryptocurrency companies for Bitcoin and potentially other assets eventually. And I think that what we're going to see is this sort of subnet, like in the Lightning Network, of big, really, really well-connected custodial institutions, and either traders or other account holders at those institutions moving Bitcoin around between those institutions in a much more efficient and faster way than they can do on-chain. And so that's a trend that I'm starting to see will probably take place. And so I'm kind of excited to see how that develops.
So, I mean, that's pretty intriguing. So let's unpack that a little bit. I mean, you say, in part, Lightning might be a settlement rail for something other than an asset other than Bitcoin. Are you thinking stable coins or something else altogether?
So I think down the road, this is potentially years away, but there's opportunities to, so there's we've had color coins and other sort of types of assets, Tether, right, on chain. There's always been sort of talk about how do we take that off chain, and I think we might see things happening there. I don't think that's going to be first. I think it's first just going to be Bitcoin, just moving Bitcoin between exchange A and exchange B. For example, let's say you're buying Bitcoin on River and you want to go do some options trading on, pick your degen platform of choice, right? And it's mempools are crazy, slow on-chain transactions. You don't want to wait for 6 comps to put in your 100x position. You can just instantly move your Bitcoin, off River onto BitMEX or whatever, and do your thing and move it back. I think we're going to see lots of that and I think there's this other aspect to financial institutions running Lightning nodes that is a little bit also not really talked about, which is I think they're going to really be picky about who they open channels with. And I think actually a lot of financial institutions will almost try to have either informal or formal legal agreements set up with their peers to agree to operate in good faith in the event of any sort of adversarial or accidental sort of channel closing or anything like that. So I'm kind of just going on, but this is sort of, I think, an interesting concept that I don't think is really being deeply explored, and is certainly going to be a thing. So I just felt like bringing it up.
So you're almost suggesting there will be different kind of most favored pathways on the Lightning Network, for lack of a better turn of phrase.
If I had to guess, the way it's going to look is I think there's going to be like this central cluster of financial institutions that all connect to each other and are all sort of have sort of informal or formal agreements to play nice. And then there's going to be like this outer ring of sort of smaller institutions that they're okay connecting to. And then those sort of, I don't want to say second tier. It doesn't mean they're like not as valuable or not as good companies, but more willing to just connect to random other nodes, and are more willing to take that risk for one reason or another, whether it's an economic reason or a philosophical reason. And they will be like the connector to the rest of the Lightning Network from this sort of more like internal hub of the big financial institutions. That's just my guess of like how it's going to play out.
Interesting. So I'll open it up to the crowd for questions in a moment. So get the juices flowing on that front. But one last question before I do. Obviously, you're very bullish on Lightning. Can you give the audience just some sense of scale of your business? How many employees do you have? What jurisdictions do you operate in? And kind of what percentage of your resources you're applying against Lightning these days?
Sure, yeah. So we're about 40 people. I think we're at 37 today. And yeah, we operate, I think we're now in 46 states, technically. It's been a while. We're still waiting on New York, and that's another entire different topic. And then and we're putting about 20% of our resources, into Lightning. It's a pretty big chunk of what I really care about, and want to make sure we really push the bar there. And we don't only do Lightning as a company. We do other things like brokerage and mining, but Lightning is really core to what we're doing.
Cool. And do you serve institutional clients outside of the U.S.?
Not right now.
Okay.
Stay tuned.
Well, with that said, I'm sure there's some questions right here in the front. The fine gentleman from Germany.
Thank you, Chris. I have a question regarding running the whole Lightning thing securely from a hardware point of view, or like server. How do you see the key management? Is there something we should be very concerned about it, and something coming up could we expect something like a major hack and infrastructure problem there?
Yeah, so it's a great question, and I think this is just a fundamental challenge for anyone running Lightning Network infrastructure at scale. Security being one main pillar of challenges people are facing, because it's effectively a hot wallet. And not only is it a hot wallet, it's a hot wallet with network connections to other peers that can initiate state updates to your system. And there's no perfect way to be 100% certain that you will never lose any funds. We have not lost any funds via Lightning, and we basically treat it as a hot wallet. So we only keep funds on our node infrastructure that we're willing to, that we are confident we can make whole in the event of some security breach. That's just sort of how we philosophically approach hot wallets in general. What companies have historically done, and I think what will end up happening with Lightning is things will continue to harden. Sort of best practice controls will sort of start to standardize across the industry in terms of access control, remote signing, sort of HSM style sort of policy engines to try to detect anomalies and prevent things from happening. Once these standards are in place, it will become insurable, probably. Lightning nodes will become insurable. And because that's what we saw happen in the on-chain space with like on-chain hot wallets is, for example, take a company like Coinbase. They say they have 1%, like less than 1% of assets in their hot wallet. But in practice, that's still a lot of money. That's like potentially billions of dollars. Like for some companies, losing 1% of assets could still make them insolvent. So it's still really important to insure your hot infrastructure. And so I think I hope that over the next year or two, we start seeing some some insurance options for Lightning nodes, which would be a big step forward.
Great. Next question. The fine gentleman from Panama.
Yeah. Hey, thank you for your talk and time, Alexander. I have a question about like when you're knocking on doors you're treating with big companies, family offices, like you said, pension funds, whatever it is. I'm assuming most of them want to, at some point, cash back out into fiat. How much of an effort do you guys put into like being a maxi in the whole topic and trying to get them to understand that we're crossing over that bridge into the Bitcoin standard?
It's a good question. So legally, we're not allowed to give investment advice. So we're not allowed to tell anybody you shouldn't sell or you should buy. That said, we always make it very clear. Like as a company, we're very long Bitcoin. Like all I really care about, like in terms of wealth, is like how much Bitcoin I have, right? And so I try and communicate that to our clients because they really look to us. They really ask us sort of like, how do we see things? How do we think about it? So that's about as far as we go. But I do think the one thing to recognize actually is that this mantra of never selling Bitcoin is actually sometimes short Bitcoin. If you've incurred if you're down, if you're in the red for the year on your Bitcoin, and you can sell your Bitcoin and incur a capital loss, and then move that cash into mining or some other asset to avoid any wash sale issues, you can actually come out ahead. So sometimes selling Bitcoin actually makes sense from a tax perspective.
Next question, gentleman in the blue shirt. Sorry that I don't know your home nation.
From Austin, Texas.
Hey.
Texas.
Yeah.
Texas.
Got a Texan in the house.
Texas is a great
Alex
country.
and I.
An amazing country.
Good country. One of the biggest obstacles for institutions, Alexander, as you probably know, is the gap accounting rules. Very onerous. There's been statements by several CFOs that have Bitcoin on their books today. I know the Gap Council or whoever creates those standards is coming up with new rules around that to make it not as onerous to hold Bitcoin on their books. Have you spoken with any regulators or with the Gap Council to find out how long that's going to take and what that may look like? And if and when that gets adopted, will that accelerate a lot of companies holding Bitcoin?
It's a great question. It's not something I have as much clarity into as I'd like. Actually, I had heard something different, that a few weeks ago I heard that they are still sort of the mindset that this is a fad and is going away and they don't need to make rules about it. But I hope I'm wrong about that. That was a sort of just passing comment I heard from somebody. Related to talking to regulators or the Gap Council, I have not talked to them myself. I've talked to a number of legislators and made it clear that this is a big deal and we need to address. And we try and put as much resources into sort of advocating for Bitcoin in DC as is feasible for our company. And that's one big point of discussion for us when we do talk to people who are in power. And so, excuse me, I don't know what the future brings there, unfortunately, but they don't seem too keen on moving quickly. I think there was a second part to your question. If this does change, what does it mean for institutions? I've never had anyone not buy Bitcoin from us because of gap accounting rules. But again, as I mentioned, we don't serve sort of the biggest tier of institutional clients, like the public companies and pension funds. And so I would imagine for any publicly traded company, that's a much more material thing. We tend to serve private companies more often.
Next question. Going once.
Hello. To what degree do ESG concerns affect or rather block or slow institutions' decisions to buy or adopt Bitcoin? Is it easy to get an institution to sort of break ranks? To what degree is it something that they really agree about?
I see. Yeah, so I think, so as related to is ESG preventing institutions from buying Bitcoin, we've never had a client not buy Bitcoin because of ESG reasons, but again, it might be self-selecting. I don't know if I have an answer there because I think we tend to only hear from people who've decided to do that. I don't think if an institution was sort of wavering about buying Bitcoin because of ESG concerns, they might not even make it to even reaching out to us. So I think the answer is I don't really know. I do get the sense that the ESG narrative is largely being defeated, or is not necessarily winning, and I see some good signs there, but I don't have insights into any specific sort of companies that are having those debates internally.
Any other questions from the audience? Aaron, you just walked into the room. What's top of mind for you?
Hey, Aaron.
I've got a question while the audience are thinking up their own questions. So my question for Alex, obviously I'm a fan, I love what you're doing. So my question is, I'm not intending to obviously FUD the Lightning Network or tempt fate or whatever, but I'm curious, this idea of having large private lightning channels between large institutions, do you have thoughts on this idea, for example, channel jamming or people trying to sort of probe and figure out those channels and then try to jam them or things like that? What do you see the future there? Do you see it as we'll get security improvements that stop that, or do you think insurance fixes this? Or I'm curious if you have any thoughts on that.
Yeah, so the whole sort of space of adversarial attacks against Lightning node infrastructure is, I think we haven't even really started to scratch the surface because there really haven't, there's been, I don't want to jinx it, but there's been surprisingly few, which I think is going to definitely change and I want to be proactive about. I think part of the reason for having these private channels and trying to only connect to nodes who you really trust is to prevent this, the risk of things like this happening, right? And I don't think anyone has a good answer now on, handling sort of all these classes of attacks if they were to happen. I think it's one of those things we're just kind of have to see, and largely they won't cause loss of funds, they'll just cause downtime. So I think that's sort of how people are thinking about it.
Totally fair answer, I think. Anyone else? I've got a question up the back. I'll get to you.
You mentioned you were active in the mining space. My company does some work with firms we've explored some work with firms like Goldman Sachs and followed to a proposal with the government in South America on mining. And they particularly mentioned ESG being a primary concern on the mining side. Have you seen similar concerns in sort of institutions that you work with?
I'm sorry, I didn't quite get the question. I think maybe speak a little louder.
For sure. So my firm does some work with companies like Goldman Sachs, who've been exploring collaboration on mining opportunities, and they particularly mentioned a concern on the ESG considerations. Have you seen that similar concern applied to institutions that you work with?
Are you asking are institutions concerned about ESG?
On mining, in mining in particular.
Oh, in mining. So most of our mining clients are individuals. So no, we haven't really seen that issue yet. I think certainly, I think the ESG thing, I think most of the concerns there are around the tier of capital that we aren't really generally serving, which is like capital that's more, that's at the, can be influenced by sort of national politics, which is really like the big public corporate money and pension funds. That does trickle down to sort of the second tier like money, but we don't deal with most of that. So I don't really have a clear answer there. But I'm sure like a pension fund would probably not want to invest in mining right now, or many of them.
I'm going to jump in here because I think the ESG narrative is certainly a false narrative, and I wrote a long blog post that went a bit viral, and I'm going to take the stage here because I'm going to encourage all of you, if you so choose, to take this message forward. I mean, I also spent the first 25 years of my career building renewable energy companies and fighting climate change, so I know a little bit about the topic, but the short insight is we want Bitcoin to use more energy, not less. Energy consumption by the Bitcoin network is a feature, not a bug, right? So we need to reframe the conversation in that way. And there's no other industry that's valuable to humanity where at the outset we said, maybe we shouldn't do it because it uses too much energy. Like refrigeration is good for food. It allows us to keep fresh food valuable longer, right? Nobody says, oh, we shouldn't have refrigeration because it uses too much energy, or we shouldn't have aluminum for constructing automobiles and planes, or we shouldn't have pharmaceuticals, or anything that uses energy at some degree of scale. Bitcoin, compared to these other industries that I just mentioned, uses a relatively minuscule amount of energy. It's good for humanity. It's really just the power brokers that control the media and the government and the existing financial system trying to create FUD, as we all know. And I encourage all of you in your personal conversations, especially those who are Americans going home for Thanksgiving, to reframe the narrative. Next question.
So you said you expect to see big lightning channels between institutions in the future. What do you think about liquid, and if you would consider using that, looking into that?
So I'm skeptical that Liquid will end up being the settlement network between any institutions. One of the challenges is fundamentally the custody infrastructure that you need. Well, so you basically need to treat Liquid like a separate coin. The time to peg into Liquid is like 144 blocks. So you need to basically, if you think like the operational complexity of integrating with Liquid, it's potentially significantly more or equal to the operational complexity of operating like Lightning infrastructure, and with the difference being that there's seemingly a lot more demand for Lightning. I think when I think about sort of what it would take to integrate with Liquid, the way I would want to expose it in the UX to our clients is just another way to send Bitcoin. It's not a separate asset. In order to do that, we need to maintain a Liquid, an LBTC position behind the scenes, and a BTC position. And so we'd constantly have to maintain sort of this amount of LBTC in custody. So we would constantly have to like manage like pegging 144 blocks ahead into Liquid to make sure we had enough Liquid to serve like on-demand withdrawals for our clients. And and for what? Also like the reality is like on-chain fees aren't high right now. So like Bitcoin blockchain fees aren't high. And so that's another like unclear. So it sort of just makes it sort of like unclear sort of what the value add is. I just think Lightning, because there's no functionary set, it's completely permissionless. I think it's gonna just grow and flourish much faster. Personally, that's just what I think.
I think we have time for one final question.
Are there uses where maybe institutions, I'm thinking more of those that support, emergency activities, where the speed adds a terrific rather than just a convenience, like in an emergency kind of thing where money needs to get to people, in a certain kind of way. Are you any familiar with them using this as a way of delivering, a service or delivering resources to people? Is that practical? Is that possible?
So are you asking, is there interest in using Lightning to get money to people faster?
Yeah, in an emergency. In other words,
in an emergency.
An emergency sort of profile where that's the point.
When you say emergency, do you mean something like a natural disaster, or what?
Yeah,
what
I mean, yes, exactly what I mean. A hurricane, tsunami, an earthquake.
I see.
Blow up buildings, people dying.
I see.
And you need, is that going to happen at some point? Do you think?
Well, I personally haven't seen that. I'm skeptical that the ability to move money fast enough is moving money faster helps that much in those situations. Because really what they need to get there is the goods and equipment, not money. But I could be wrong. When it comes to the general ability to move money faster, I think honestly the initial value add there is going to be for traders. I think it's more just going to open up use case for new types of commerce. I'm not so sure it makes a lot of sense in an emergency scenario because I think it's unclear also will people have cell reception or internet access? I don't know, but maybe.
Alex, it's great to have you here. I know you've been in Dubai and San Francisco and all over the world in recent days, so glad you're able to join us. Any closing thoughts or words of wisdom you'd like to impart to the crowd here?
Well, I think what I always like to say is, if you're a builder, keep on building. If we don't build it, nobody will. And don't ever feel like you can't be the person to build the future you want to see. So yeah, that's what I would say. Keep building.
Awesome. Thank you.